What is that?
So buy an asset, right? Buy a car, right? We know about how the adage is you drive a new car off the lot, it loses 20% of its value, right? That's depreciation.
Yes.
So it is legitimate for a business to have a capital asset, right? So let's say a truck, like we'll talk about a delivery company. So they buy a truck and 3 trailers, and that truck and those trailers have a service life that is depreciated over time. That depreciation creates a tax deduction, right? And it affects the value of the business because there's that term EBITDA, earnings before interest, taxes, depreciation, and amortization, depreciation. So when we're looking at the value of a business, we're going to look at it before the depreciation is taken out. And then for the business owner, it's, hey, I'm using that depreciation to lower my tax bill. Well, Congress had enacted a law that had started sunsetting that you could take 100% of the value of that capital asset and depreciate the entire amount in year one. So if you have $1 million business and you bought a $100,000 asset, you can now take that $100,000 deduction in year one. It has graduated down over the last couple of years. I think it's at 60% this year.
Okay.
But now in the current legislation working its way through, they're looking at restoring the 100% bonus depreciation. Now, the surprise for the business owner is that if you've depreciated that asset to zero and then you go to sell the business, that value is going to get recaptured. It's called depreciation recapture.
Okay.
And it's going to come back and be part of the equation. And so there's going to potentially be capital gains taxes figured in there.
Speaking of capital gains taxes, when the owner sells the business, what are there tax implications for that business owner?